HgT is a private equity company which invests in leading, profitable, unquoted European mid-market businesses with an international footprint, offering mission-critical, low-spent software solutions to SMEs. It is managed by Hg, Europe's leading private equity technology investor, and provides public market investors with exposure to Hg's portfolio of over 50 such holdings representing over $160 billion of aggregate enterprise value. The trust provides high-quality exposure to the corporate digitalisation theme, supported by the structural demographic trend of a declining working-age population, which drives up labour costs in developed countries and stimulates software adoption. Hg's head of research examined IT spending patterns across countries and found that the share of software spending grows with the level of overall IT spending as a percentage of GDP. This suggests that the sector is not approaching saturation even in the more developed economies. According to Gartner's forecasts released in January 2025, global spending on software and IT services will grow by 14% and 9% in 2025, respectively. The trust offers a combination of a high share of recurring revenues based on software-as-a-service subscription models and high customer retention. Hg's sweet spot lies in defensive tech growth companies operating in one of 8 core end markets: tax and accounting, ERP and payroll, legal and compliance, automation and engineering, insurance, SME tech services, fintech, and finally healthcare IT. HgT has historically delivered revenue and EBITDA growth of around 20–30% per annum at a margin above 25% across its top 20 holdings. Therefore, it fulfills the so-called Rule of 40, which is a rule of thumb, but based on empirical evidence, saying that software stocks with combined revenue growth and EBITDA margins of 40% or more typically generate higher valuations. The vast tech expertise and value creation capabilities of Hg come from a combination of 3 strengths. Firstly, its in-house team of operational experts, which includes more than 50 senior operational specialists, each supported by a network of trusted third-party associates and partners. Secondly, an extensive community of key managers from its portfolio companies, called Hg Hive. And thirdly, intellectual property, tools and group services on which its portfolio companies can rely. As a result, the trust posted a strong NAV return over the 10 years to end March 2025 of 18.2% per annum. Hg remains committed to leveraging Gen AI across its portfolio, noting some initial promising progress, and it hopes to see a more meaningful impact on the top and bottom line in the next 1 to 2 years. Hg delivered a considerable volume of liquidity events in 2024, and underlined that all Hg fund vintages from 2012 to 2018 rank in the top quartile for distributed to paid-in capital versus peers. This translated into gross proceeds from exits and refinancings for HgT in FY24 of £508 million, or 22% of opening NAV, which is consistent with the average between 2019 and 2023 of 23%. Hg's ability to deliver meaningful liquidity events in the tough environment is a clear differentiator in the context of the decline in the global private equity exit activity from the 2021 peak. Between 2017 and 2022, the trust's exits were completed at an average uplift to carrying value at the end of the preceding year of a solid 38%. Even in the more demanding environment after 2021, marked by low deal activity and pressure from higher interest rates, the trust was able to realise investments at an uplift, which in 2024 stood at an average 15% compared to the quarter prior to signing the transaction. We believe that this is a testament to the quality of the trust's portfolio and its conservative valuation approach. If you would like to find out more about HgT, please visit Edison Group website.